The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone, and welcome. My name is Joe Moretti, and I am part of the ridiculously nice sales team here at AmeriCollect. We are thrilled to have all of you join us for today's webinar titled The Impact of Medicare Bad Debt on You and Your Collections Partners. Now that the Medicare bad debt final rule is fully in effect, it is important to re-examine how these changes may impact your facility, and that is exactly what we have planned for you today. We know this is a very popular topic that everyone is so anxious to dive into and learn more about, and that it may bring many questions with it. So I want to take a moment just to show you how you can ask questions during the webinar. If you look at your screen, you will see an area on the right-hand side where you can type in a question. Once you submit your question, it will be sent to me and I will share it with your presenters so they can respond to it accordingly. Today, we have two of our best to present on the topic of Medicare bad debt's final rule. We are confident you will find this webinar to contain very valuable information you can take back to your team. It is my pleasure to introduce today's presenters, Sean Gretz, our president at AmeriCollect, and Nick McLaughlin, one of our ridiculously nice sales representatives here at AmeriCollect. Sean and Nick both bring with them a wealth of knowledge on the topic of Medicare bad debt. With that, it is my pleasure to turn it over to Sean and Nick.
All right, thank you so much, Joe. I am Nick McLaughlin. Sean and I together absolutely love serving the healthcare industry, love supporting the awesome work that you do, taking care of your patients, and we are honored by the opportunity to share our knowledge on this topic here of Medicare bad debt today. So one last thing there at the bottom, quick disclaimer. If you're seeking legal advice, always consult with an attorney, which we are not. All right, so let's fire up with a quick introduction to Medicare bad debt for those who may be with us that aren't terribly familiar with the program. Putting first things first, the Medicare bad debt reimbursement program that we're talking about today is part of the inpatient prospective payment system, commonly known as IPPS. So we wanted to let you know right out of the gate that the program that we're discussing today only impacts IPPS hospitals. Professional component bills do not qualify for Medicare bad debt reimbursement. And so is that lame and unfair? Certainly, but that's how the rule is written today. And all that to say, anyone not from an IPPS hospital, if you'd love to stay on, we'd love to have you stay on and learn about the program. But if you were hoping that this could apply directly to you and it doesn't, jumping off here won't hurt our feelings. I wanted to give you that information on the front end. So thank you very much for that. All right, so as healthcare financial professionals, you probably recognize this awful mess of a flowchart as all of the steps and processes you need to follow to a T in order to get paid. Well, that theme of convoluted reimbursement models holds true in Medicare bad debt as well. So under Medicare rules, amounts that remain unpaid by patients or beneficiaries should not be borne by non-Medicare patients and vice versa. What that means is uncollected revenue, such as deductible and coinsurance amounts, can be added to what is called the Medicare share of allowable costs. Therefore, Medicare beneficiaries enrolled in the traditional Medicare program are generally responsible for both deductible and coinsurance payments for medical services and supplies. When Medicare patients or Medicaid agencies, in the case of dual eligible beneficiaries, fail to make those payments to certain providers, then the Medicare program will reimburse providers if reasonable collection efforts have been made. So it is Congress who authorized the Secretary of Health and Human Services to promulgate these regulations to ensure that hospitals would not be forced to shift these costs to non-Medicare patients. The question is, how do they do that? And long story short, they decided to reimburse you 65 cents on every dollar for unpaid Medicare patient balances. This includes copays, deductibles, and coinsurance amounts. And quite frankly, and coming from the collections world, 65% is pretty darn good, especially when we're talking about patient balances, especially when we're talking about patient balances held by a population that are largely on fixed incomes. But if only it were that easy as you could just get 65% of your Medicare patient balances. The long story more accurately looks like this. It's a path of burning hoops to jump through, all medical providers saying, oh man, I wish we didn't have to go through all of this just to get paid. I know that my friends in healthcare finance know this feeling well. The amount of hoops that you need to jump through, especially the ones that are on fire, seems ridiculous, and it should not be this complicated. But still, 65 cents or 65% can add up quickly. And we here at AmeriCollect are here to support the awesome work that you do at your facilities. So we want to do all that we possibly can to be the best partner on all fronts. Find you the most money, be the most ridiculously nice to your patients, and help make your lives easier jumping through these hoops for you in many instances. So here's the other thing about that 65%. That pie is not getting smaller anytime soon, especially considering that the baby boomers are coming. And well, quite frankly, they're here, the early baby boomers anyhow, and there are a lot of them. So here's a line graph that estimates the number of Medicare beneficiaries put out by the Medicare trustees. And here we are in 2020, about midway through the graph, with over 60 million Medicare beneficiaries. Give it 10 more years, just 10 more years. It's estimated that will be over 80 million. That's another 20 million beneficiaries, or 33% growth in that number. That's a lot of 65%. There's certainly a lot of opportunity for reimbursement as the program stands now, but pursuing Medicare bad debt reimbursement and setting up yourself, your collection agencies, and the processes that you have together to make compliance with these rules possible will pay off huge in the long run too. So let's do our part to help get you this money. All right, let's get to some of the specifics on the final ruling. The IPPS Final Rule 2021 addressed a number of areas that impact you, your collection agencies, and how you'll need to work together moving forward. So here are the 6 items that we are going to cover together. The first one is the genuine collection effort requirements. The second is new collection agency or new collection activity documentation requirements. The third is timing of the 120-day collection period and what resets that clock. The fourth is posting payments back to patient accounts. The next one is claiming Medicare accounts at collections for reimbursement. And last but not least, how collection agency fees need to be accounted for reimbursement purposes. So sounds like fun, I know. So let's get to it. Yes, I wish we didn't have to go through all this to get paid, but we are here in healthcare and we do, and 65% is a lot of money. So let's learn what we need to do to get paid. And we'll start with the genuine collection effort. So why does CMS want to ensure a genuine collection effort on Medicare patient balances? Well, quite frankly, it boils down to an attempt to address the moral dilemma produced by a guaranteed 65% collection rate. So CMS knows that, shoot, if you've got 65 cents on the dollar coming from CMS, whether you attempt to collect that money or not, wouldn't it just be easier to forego collection activity on your Medicare patients? I mean, they are seniors anyhow. If there were not this genuine collection effort requirements, I believe that most hospitals would not even attempt to collect on Medicare patient balances, or at the most simply run through a token effort to collect, which is what Medicare is trying to eliminate. So the question is, what qualifies as a genuine collection effort? Well, the bar that you have to get over to qualify is actually quite low. Most hospitals meet the requirement during their internal patient billing process. CMS defines a genuine collection effort as, one, the time frame is 120 days from the date of the first bill. So genuine collection efforts include sending patients their bills, sending patients subsequent billings, so similar to 501R's 3 statements and a final notice requirement. Any telephone calls that you make qualify as genuine collection efforts, and also CMS includes something called personal contacts here, which they define as in-person contacts. In collections, we like to think of that as my cousin Vinny showing up at the patient's house to bust some kneecaps and get his money, right? No, of course not, just kidding. We're the ridiculously nice collection agency. Actually, the most common example of what CMS would call a personal contact is the patient coming to the front desk and the registration staff or financial counselor letting that patient know about their outstanding balance and asking for payment. That's what qualifies as a personal contact. So all of these things are pretty easy, happen on the internal billing process, but the large caveat is, of course, to meet the genuine collection effort is the similar collection effort requirement. So the similar collection effort requirement is by nature pretty simple. Treat your Medicare and non-Medicare accounts similarly. Yes, simple. As I said earlier, if it weren't there, I bet most hospitals wouldn't even decide to attempt collecting from Medicare patients or just sending a few bills and seeing if they can get paid from those. But you have to treat them, Medicare accounts and non-Medicare accounts, the same. To give you a few examples, if you make collection calls to non-Medicare accounts, you need to make collection calls on Medicare accounts too. If you send non-Medicare accounts to bad debt collections, you need to send your Medicare accounts to bad debt collections too. If you send your non-Medicare accounts to a secondary collection agency, you got to send your Medicare accounts to a secondary collection agency too. So, like I said, it all boils down to treat Medicare and non-Medicare accounts similarly. Are there exceptions? Of course. Chances are that you are a little bit more sophisticated, and probably more than a little bit more sophisticated than treating all of your accounts the same. What about using propensity to pay modeling? What about putting more work into higher balance accounts? Good thinking, it makes business sense. The primary example of what qualifies accounts as needing to be treated similarly, according to CMS, is balance size. They say treat accounts of like amount the same. So if you only send accounts higher than $2,000 to a second placements agency, then you have to send Medicare and non-Medicare accounts above $2,000 to that second placements agency. But wait a second, I think we might have just found another loophole. How many traditional Medicare accounts do you know with balances higher than $2,000? The 2021 Medicare Part A deductible is $1,484. Just saying, maybe we found an opportunity there to second place your unpaid primary bad debt accounts that are over $2,000. But here comes some extra responsibility and liability that you didn't have before this last final ruling. The provider must insure. Don't you love it when somebody says that you are now responsible to make sure that somebody else doesn't break this rule either? No? Yeah, I don't like that either. That said, CMS now holds you, the provider, responsible for everything that falls under genuine collection efforts as it relates to similar efforts on Medicare and non-Medicare accounts. So this is no longer a requirement simply for your in-house processes and activities. That if you send non-Medicare accounts to collections, you need to send Medicare accounts to collections too. So this requirement now applies to all collection activities done by your collection agencies too. And they must be able to provide documentation to prove that they are making similar collection efforts on non-Medicare and Medicare accounts of like amounts. So sounds like fun, doesn't it? Now, actually, here's a pointed question for you. How confident are you in your collection agency's ability to do this and make documentation of those efforts available upon request? If the answer is not super confident, you should really give us a call. If you use 2 agencies and the answer for the other guys is not super confident they're going to be able to make this happen, Quite frankly, we at AmeriCollect will gladly treat all your patients ridiculously nicely, not just the lucky half that you send to us. All right. Nick, you say that you are able to meet these requirements and provide the documentation required for Medicare bad debt reimbursement, but what does that look like? Well, I'm glad you asked. Sean, finally, your turn. I've been blabbering for too long. You are super well versed in the operational aspects of making all this happen. Can you share what we're doing to ensure compliance for our clients?
Sure, sounds good, Nick. And hey, thanks so much for the sales pitch there too. I truly appreciate that. It's your job. You know it too. So that's great. So let's talk about this, right? So what are we doing? We, as in AmeriCollect, how can we ensure that we are doing the collection efforts for your accounts to make the genuine collection efforts? Well, we treat all accounts the same, regardless if it's Medicare or non-Medicare accounts. It's in the same workflow processes that we utilize. It's the same statements that we send go to the Medicare and non-Medicare accounts, the same phone attempts that we would make based upon prioritization go to the Medicare and non-Medicare accounts. And it's the same extraordinary collection actions, if any, that is, if you do any extraordinary collection actions according to 501R, is what we do on every account. It doesn't matter if it's Medicare or non-Medicare account. So this is something that you should look into, like Nick said, if your agencies make sure they're doing the same resources on both, same statements, same phone attempts, because a lot of times agencies will utilize the payer and determine the work events to go on accounts. And by utilizing that payer, there's times when they take Medicare and deprioritize the work events on them. Well, you got to be careful with that, especially in healthcare collections, because you don't want that 65 cents dollar on a dollar coming back. So one of the things that we do, we started this earlier this year, is that on every single Medicare and non-Medicare account, we are actually auditing to ensure that we're doing the work events. December 17th was our last audit. So we took a look from our data scientists and our workflow team to make sure that we are not putting different work events into each of those. So that's one thing we're doing. We got two others. So Nick, next slide. So the two other things that we're doing, and this is something we've been doing actually for the last 10 years, and that comes from being a 100% healthcare collection agency, and that's all that we do. So healthcare is what we know. We've been separating Medicare and non-Medicare accounts into two separate client codes. Now, all reports, every functionality as a company is all the same back to you as an organization. But by separating in two separate client codes, it allows us to separate the reporting coming back, because truly where you care is the accounts that come back into your office, the Medicare accounts, to put them on your cost report. Well, that allows us to give you data specifically on just those accounts. And then number three, for some of our clients, we create that specific Medicare bad debt report that comes back into your organization. So you can use it for your 990 report, or whoever it is from your organization. Hint, that's normally your controller or someone in finance that fills out that 990 and submits that. But those are the individuals, we can provide them the uncollectible report. So it makes it so easy for you to submit your 990. And that's part of how working with AmeriCollect, we want to make it easy for you. So with that, I get to throw it back to Nick.
Yeah, absolutely. And Sean, one note on those reports that our clients require for Medicare bad debt reimbursement. We just had a client reach out to us requesting those reports last week, and our team was able to turn that around in so quickly that I got a wow. So instead of having to wait a long time, we turned this one around in just a couple days. So feel free to shoot in those requests, and we'll get you the data that you need for your cost reports. So with that, documentation seems to be the name of the game here with this year's Medicare bad debt final ruling. Now we get to cover new collection agency documentation requirements. All right, the amount of documentation required in healthcare, I think it's safe to say, is a little out of control. We wish that we could do something about that, but this is the biggest piece that will actually put that 65% at risk. So what we can do about it is document like crazy, keep all of that data stored and available. And one would think that all the clouds that we're filling up with this data are starting to get full by now. Sean wouldn't let me tell my next joke, but I'm going to go against him anyhow. At what point do the data clouds start raining? I mean, really, when do they start raining? They got to be getting heavy by now. All right, so new collection agency activity documentation requirements. Previously, you only had to worry about documenting in-house activity, statements sent, calls made, things like that. But now your documentation requirements apply to in-house and external agency activities. So this applies to both early out and bad debt partnerships. And the rule states that you now need your collection agencies to maintain and, upon request, furnish verifiable documentation to your Medicare Administrative Contractor, or your MAC. This includes patient account history documents that show dates of various collection actions, issuance of bills, follow-up collection letters, dates and times of telephone calls, and here's the big one, copies of bills and follow-up notices sent. Now, most collection management systems will store dates and times of calls made by a predictive dialer. Hopefully they keep track of any statements, notices, and or letters sent, but keeping image files of bills and follow-up notices sent is something that most collection agencies do not yet do. Sean, what are we doing on this one to make sure that our clients are compliant and still have that 65 cents on the dollar available to them for Medicare bad debt reimbursement?
Thanks, Nick. I love your joke, by the way. We love Epic and Cerner, right? So one of the things that we have the capability with those two great systems is that we can actually load that data back into Epic and Cerner to make it so much easier for that MAC auditor, right? Where we want the data is the easiest place possible for when that MAC auditor is in your system looking for that data, and that's your EHR. So for those two systems, a lot of times we load that data right back in, especially in early out bad debt. We have several clients that take that data back in as well. Just time stamping statements, time stamping notices, and those things as well. So that's one thing that we're doing. But you know, not everybody's on Epic, not everyone's on Cerner. So we have to count for those systems as well. And on our next slide, we talk about this. For our folks that aren't on it, we build an Excel file. And we can build an Excel file time stamping the statements and or phone attempts that go out on your accounts. And we store those statements. One of the things that we're working on is with our statement vendor. They're helping us to store it for up to 3 years. That way we can pull those images of those statements and get them back to you when you need those images of the statements as well. So the great news is we're working on this to ensure that your accounts, the documentation that you need as part of this rule, and something I should back up and say, one of the things with this uniqueness of this rule is they said it is retroactive in many attempts as well, or many cases as well. So one of the big things they did in this regulation is that a lot of this is retroactive, which is very unique, and there was a lot of pushback on that, but it still went in effect that it's retroactive. So you need to be able to get this data not just for today, but also previously history as well on those accounts. So just be aware of that as well. So I'll throw it back to Nick.
Thanks, Sean. Hey, guess what? We got more rules. So let's address the timing of the 120-day collection period and what resets that clock. In the first part, we discussed that 120-day collection period is part of making a genuine collection effort, but of course they had to add in a little bit of minutia there, and so now, so previously, if the account went 120 days without being paid in full, the 120-day collection period requirement was met. But now the 120-day restarts after any payment, no matter how small, is made within the 120-day period. And honestly, I call it a 120-day period now in quotation marks because it can start over an infinite number of times. Somebody's got an account for $100. If they make a $10 payment at day 119, that collection period starts over and you cannot claim it as Medicare bad debt for another 120 days after that. If they do that on day 119 again, then it's another 4 months. I mean, it just keeps going and going and going. So what is this really? I think it seems like another gotcha opportunity for the MAC auditors to look for and pull back Medicare bad debt reimbursement amounts. So Sean, what is it that we're doing to help make sure that our clients are able to comply with this and we're not sending them back any accounts that have not satisfied the new 120-day collection period requirement?
Yeah, Nick, my first request or ask about every client is make sure your data file has in it the date of the last payment. It is a extremely important date. Many Epic concerners do provide us that date in the date of listings or the listing that comes with it. But that date of last payment is extremely important to it. So in our data file, we program our system so that we're loading that data back to you as well of the date of last payment, because your system needs to be updated on that as well. And or you need to make sure that you're posting directly back to the accounts as well, right? So we even recommend this approach with second placement agencies. You will need to ensure that they are watching that date of last payment, so that you are not mistakenly placing those accounts for at least 120 days. So let's say we have a primary account that we need to cancel and move it to second placement. Well, if there's been any payment in the last 120 days, let's not cancel it. And the same thing should go for all your agencies. So this is a talking point that you need to have with your other agencies as well. Make sure they're not canceling accounts if there's been a payment in 120 days. Back to you, Nick.
Thanks, Sean. Hey, so what about posting payments back to patient accounts? So CMS did want to address the posting of payments back to accounts, but mostly a clarification actually. It says that hospitals can only claim uncollected amounts for Medicare bad debt reimbursement. Seems reasonable, no double dipping, but the clarification though is that they require the gross amount collected to be posted to the account level to claim the final account balance for reimbursement. So not the amount that you keep after our collection fees. Sean, what are we doing about that?
Yeah, so a majority of our clients, we actually do post back gross into the HR. We do recommend that as best practice. It is the best approach to ensure that your accounts are paid in full. So don't net our fees on the account level, and make sure it's posted at the gross level. For those that aren't, this is something that is really a challenge, because you have payment posters that are probably doing this manually on your behalf that's not taking electronic data file. So really, you have to start working with those individuals that are your payment posters to ensure that they are posting collection accounts back to the account. And look, if you're not doing this, and this is a big if, because I do know there's still some facilities that aren't posting payments and they're using a general ledger file. Well, now's the time to start thinking about who's the system of record. Now, your collection agency can be that system of record, but make sure that there is a system of record that is knowing where the payments are being posted and if they're being posted as gross. And especially if you're working with a data outsourcer like Nick talked about, where the individual client or individual works with a partner to pull this data, make sure that they are asking specifically what is the gross amount of the account placed, what were all the payments to go along with it, and subtract the payments and do not subtract the commission part of it. So with that, back to Nick.
So the question here is, can I claim accounts still in collections for Medicare bad debt reimbursement? Fun conversation to be sure. We know that the recovery rate after so much time is going to be quite low. So why not just claim them for reimbursement while still in collections? So Sean, we've got a fun court case here to talk about.
Oh, this is a fun court case, Nick, and when we really considered this one, it's one of those where obviously y'all want to get more money back, as Nick said, and wouldn't it be nice if you didn't have to do any collection efforts? That would be the best part, and get 65 cents in that dollar. But unfortunately, HSHS said no. So 46 hospitals, and on the next slide, we're going to talk about this. 46 hospitals sued HHS and said, we want to be paid regardless if they're in collections or not. And HHS, obviously, back and forth on this. There's been several cases on this. And prior to 2006, hospitals could claim Medicare bad debts that were still pending in outside agencies. And in 2006, they reversed it. So, you know, the interesting thing here is when you actually look at this, and when you look at the court case, is that there's an argument to be made that they're making what's called a sound business decision. That's something that the Medicare is in Congress put into the determination of this, that you can make a sound business decision to treating balance size, as Nick said before, or treating like accounts the same. Well, obviously my thought process on this is, actually, let me back up here. Let me give you two examples of sound business decisions. So two types, right? So there's Medicare bad debt for indigent and non-indigent patients, right? So there's two different types. Financial assistance, those that are charity care, those types of things, that's considered indigent. And then there's Medicare bad debt that's uncollectible, which is a little bit different. It's a sound business decision, in my opinion, this is my opinion, that you use a presumptive eligibility for financial assistance to determine if they're indigent. Well, this was actually something that HFMA, and part of being on the NAC, or the revenue cycle NAC for HFMA, that we fought for on your behalf. We tried to get HHS to understand that we want to be able to make a sound business decision for financial assistance using a presumptive eligibility, right? Because the IRS did state in their in 51R that you can use presumptive eligibility. Unfortunately, again, HHS said, no, you can't use that. That is not the right way to go about this. So this lawsuit here is really about the capability to apply those to our collections. And, number one, how does it impact you? Well, you just need to pay attention to it, I think, more than anything. And Nick, next slide. Just pay attention to this because, if anything, we hope that they win. But honestly, if I had to say, will they win? I really would not hold your breath. It just does not look good for the industry overall that they're going to reverse this. So with that, I'll throw it back to Nick.
So a question that we have on items like this, because what can we do about helping solve a court case or get a favorable ruling? Only so much. But what we can do is follow one of our core values here at AmeriCollect, which is together we can, which means that we're actively collaborating with patients, clients, and our teammates. And now this one falls into collaborating with our clients to reach out with education that may be valuable to you in your roles. We want to be as valuable as we can in as many different ways as possible. And being a trusted resource is a big part of that. Thank you so much for everybody joining us today. I can't believe we haven't had over 160 attendees on a webinar. This is awesome. So obviously huge key topic here today, and we're excited to be valuable to you and to the thousands of times that this recorded webinar gets accessed in the future as a resource to hospitals across the country. So accounting for collection agency fees. Sean, can you offer up some more clarification on what's reimbursable from that Medicare bad debt?
Yeah, the interesting thing on this one is how you work your Medicare bad debt is very interesting, very appropriate to you when you're working with a collection agency. At one point, many facilities, like Nick said before, were actually claiming these as gross payments, right? So they weren't posting, they were posting net back to it and claiming the remaining amount uncollectible. Well, unfortunate, CMS says, no, you can't do that. You got to post gross payments back, and your fees have to be posted as if and when they are as administrative fees. So next slide, Nick. So for example, down below, if you have $1,000, you get and your net fees 30%. Well, that's what you have to record, right? That $300 has to be recorded as administrative fees, administrative costs, and not that you can claim that $300 or $300 back in as uncollectible amount. So that's an interesting twist to this as well. Make sure you're knowing what you're doing with your collection agency's fees.
Yep, the good news there is that the collection agency fees are recognized as an allowable administrative cost. That's important to know. So post the gross payments back to the accounts and record the collection fees as an administrative cost. All right, so what are we actually doing about this? Together we can. Here we are again. So hopefully this information is helpful and well presented so that you can serve your patients and organizations even better going forward. Sean, for those in our audience who may be unfamiliar with the mechanics of reporting Medicare bad debt for reimbursement, can you share some of that information for us today?
Of course, Nick. So the first thing you got to know is your 990, right? So if you've never seen your 990, you'll want to look it up. Each and every year in your organization, someone in your organization, hint, normally it's your controller or your director of finance or someone in that area is reporting 990 to the IRS. Get to know that person, become friends with that person, buy them a drink or two because they are either your best friend or they're submitting a document that you have no idea about that you have to answer on your Mac, and that's no fun when you get the short end of that straw. So with that, know who does your 990 is the first thing to understand to fix your problems. Second part, let's talk through some of the things that you got to also know. Well, you got to know what's put on that 990 log, Excel log that you turn in each and every year. And with that, there's several different things that you kind of want to pull out of it and take a look at. First up is the indigent status, I would suggest. So you got to make sure, take a look at who you're claiming as indigent, who you're not claiming as indigent. A great example, as we talked about before, is that financial assistance. Well, financial assistance, one of the things you have to do is make sure that those that are your qualifying via presumptive eligibility are not included in this report. Because if you're including those in the report, most likely they're going to be pulled out. You need to check for assets in order to have them qualify. So that's one thing you want to know is, are my presumptive eligibility accounts being added into this? The second one is death. With death, you have to understand, did you file a probate to ensure there's no assets? You need to be able to show that there was no assets remaining on that account. If you can do that, that's an indigent status. And then finally, it's the dual status qualifications where it's Medicare and Medicaid. You need to be able to show that you filed it to Medicaid. If you didn't do that, again, the MAC auditor is going to come back and pull it back. So whoever's filing this, you need to take a look at those accounts, do some audits on it, and make sure that it is being done correctly. And then the next one, again, item number 2 on that 990 report, you need to know the write-off amounts. Know if it's gross being claimed on recoveries and not the commissions, as we talked about earlier on your 990. So let's talk a little bit about some audit defenses, because this is extremely important. The number one thing that Medicare auditors will do is they'll start looking at your billing and collection policy. You need a strong billing and collection policy. And it's not just for this, you also need that for your 501R defense as well. So on the screen, I also have a link to a billing and collection policy we put together for 501R that's very helpful. And it's funny, across the country, I go into hospitals and at times have meetings with them. And there's countless times where I keep on pulling up the billing and collection policy, and I see it's our billing and collection policy that we wrote, which is just a really, really good feeling. But here's one for you as well. Make sure, one of the things that the IR or HSHS did in this rule, they talked about having an indigent policy and the requirement to have one. If you don't have an indigent policy, I would suggest you think about creating one, or the simplest thing that I would do is add indigent policy to your financial assistance policy. They're really the same thing, but you just need to have that in there. So it's called the financial assistance policy, indigent policy, created as 2 policy. By having both those 2 things, it allows you to claim your indigency status on your Medicare bad debt. So that's number 1 audit defense. Make sure you have a good billing and collection policy, and make sure you have the indigency policy in case. Number 2, this is the big one. This is the one that I recommend to all my clients. You need an audit defense of data. Be proactive on this. It's a pain to go backwards and look for the data, but if you're proactive and gather this each and every year when you submit your 990, it's going to make life so much easier. And here's an entire list, and I can provide this to you in Excel if it's easier to you. Just feel free to email us and we can get you the data on this. But you really want to make sure that the data that you have in here is the data that you are gathering each and every year. And that way, when the MAC auditors come in, you can basically, here you go, here's your data. And hopefully, after the first year, they go away. And they come back in and you see it 3 years later and see it again, they're going to go away. They're going to know that you know what you're doing and you did your homework. And they're not going to audit you as often because obviously they make money on the auditing of it as well. So with that, that's audit defense number 2 and the recommendation I have. Back to Nick.
Sean, that's actually that's actually the last slide that we've got here. Do we have any Q&A for from the group? And Joe, I'll leave that. I see you unmuted.
Yes, we do have a couple questions that came in. So the first one is, to clarify, did this presentation not apply to critical access hospitals?
The answer to that question is the critical access hospitals do have the capability to claim it as well. So there is a clarification on that. There is some of this can apply to them as well.
Okay, the next question is, it's my understanding and verified by CMS auditors, if we elect to claim Medicare bad debt, those Medicare accounts as well as all other accounts in bad debt need to cease collections. That being said, how do you weigh what you feel could still be collected on all other accounts, and is it really beneficial to cease collections on all other accounts to collect the 65% Medicare bad debt?
Yeah, that's a great question. There is a statistical analysis that you can do on your behalf to be able to check to see if it's actually better to qualify to cancel all accounts and check them for Medicare bad debt instead. So it's really looking at what is the historical recovery of your collection agency or your second placement agency or whoever that is. Look at what that historical recovery is. And then you got to also consider the quantity of counts that are Medicare that are still remaining unpaid at that collection agency. Taking those two things, those two data points, you can then make a determination. Maybe you are better off claiming all your accounts as Medicare bad debt at a certain point. So a great example of this is, let's say your patient population is 30% Medicare, and that's how you know that's 30% Medicare, right? So, and the collection agency is collecting 0.1% month after month. So you just take that data and say, okay, is the quantity amount that is available with 30% Medicare and the amount that's unpaid versus the amount that is still being collected, 0.1% per month over the next 12 months, which one's better? And then you make the determination of when to claim and when not to claim. It's a really fun thing that we do on several occasions we've done for our clients to make the determination, hey, it's time to claim for Medicare bad debt.
Well, and one other thing, the other option is to leave the accounts with your collection agency until the statute of limitations. So in many states that's 6 years, in a couple states it's 2, but leaving the accounts with collections for that amount of time, and then after that, all of those canceled back accounts, those are what you could claim for Medicare bad debt reimbursement.
Great, thanks guys. The other question we have is, when did this requirement start?
So I believe, I have to double check on this, but I believe it was October, was it Nick, October 30th or October 1st, someplace in October in 2020 is when I believe they posted in the Federal Registry, if I remember correctly. And
yeah,
remember what I said.
October, November is when they were, when the rule was finalized for the 2021 IPPS final rule.
Yeah. We can double check on that, but I think it's, I think it was early or late 2020.
Next question is, can you advise how hospitals report a balance after Medicare when Medicaid does not pay?
Ooh, that individual I think would best take offline, because there's several sticky wickets to go along with it when Medicaid does not pay, and what how do I say, what you receive backwards from Medicaid at that point.
Okay.
Right, dual eligibles are challenging.
Yeah.
The next question is, for the 120 rule, does this apply when accounts have not gone to bad debt?
So if the 120 rule, does it apply when accounts, so 120 days does not matter if it's in bad debt or in if it's at the still at the hospital, right? So that window can continue on 120 days from the date of either last payment is really the date now that you have to use, or the date of dropping that self-paid bill. You can't claim it for 120 days. It doesn't matter if it's in collections, doesn't matter if it's that early out. It just needs to be at least 120 days from the date of last payment or the date of the first self-pay bill.
So I think most practically speaking, If we're talking, if the question is about whether the 120 days applies to if the accounts are in-house or if the accounts are at a collection agency, if you're sending accounts to a collection agency, then the 120-day rule pretty much is satisfied except for the posting payments. You need to, the similar collection efforts requirements requires that all accounts go to collections if you send non-Medicare accounts to collections. So hopefully that's helpful there.
Thank you, guys. We have a couple more questions here. Are facilities required to determine if a patient is indigent? An example, see if they qualify for Medicaid.
So are they responsible to determine if they're indigent? The answer would be if you file them as indigent, yes, you need to make a determination that they are indigent. Is that, Nick, is that how you would answer that question as well?
It is. So the indigence requirements in the Medicare bad debt ruling, there are a couple more than what we talked about here today, because the focus today was on Medicare bad debt and how and changes in how you're going to have to work with your collection agencies. But there were definitely some more specifics in the rule about how to claim indigence. And quite frankly, one of the biggest ones was the proposed rule said you're going to have to take into consideration income, assets, liabilities, and expenses. So the proposed rule included asking about liabilities and expenses, how much debt patients have, and what their monthly budgets are. Thank goodness that got tossed out, and now you just have to consider a patient's income and a patient's assets. But yes, that's the story there.
Next question is, if a patient is deceased and we have looked to see if there is any estate and there is not, do we still have to wait until 120 days past the last payment to claim Medicare bad debt?
Yes, the answer to that one, yes.
Okay. The next one is, if a patient makes a payment on an account that did not go to collections yet, does that start the 120-day clock on the accounts at the agency?
It always restarts it. It doesn't matter when. And to be honest with you, the payment, and one of the things that also was updated is if you get a payment after you claimed it, you still have to submit that afterwards as well. So that's part of the new rule as well, something we didn't really cover here. But if you get a payment and it's, so let's say you claimed it for your Medicare bad debt, you receive a payment the next year that you report your fiscal, your 990, that has to be reported on there that you accepted the payment on a Medicare bad debt account.
And the next one is, why do they feel the 120-day rule applies to primary when a secondary is involved?
It doesn't really. Yeah, the answer is that it doesn't really. If the main reason for the 120-day rule is not claiming accounts that have a recent payment on them, and so it doesn't matter. It doesn't matter what your process is. If you place accounts with primary and with secondary, if you only place accounts with primary, the 120-day rule, you just can't claim accounts within 120 days of the patient making a payment. And chances are that, like, the biggest way that we fix that for clients is that we simply don't cancel and return back accounts. Like, one of our criteria for canceling and returning accounts is date of last payment plus 120 days. So to satisfy that requirement.
The next one is, assets can be subjective. What is the standard on assets?
That can be subjective to your MAC auditor as well. That is the if anybody has an answer to that question, that's $1 million question, because it's one of those that I've seen so many hospitals try to accomplish this, and what to look for as well. So I always say I do know I did send an example of a billing, or not, a financial assistance policy to a colleague of mine or a peer of mine at a hospital that I can dig up. So if whoever that is, if they want to, my email's on the screen, feel free to shoot me an email. I'll see if I can find that policy where I was like, hey, this is a really good job of how they defined the assets, and I think this will work for Medicare bad debt. So if you have that, feel free to send me an email.
And the next question is for those that are newer to collections. Can you please clarify statute of limitations? Is that for any kind of collections or only bad debt? And if there is no payment in 6 years, must it be written off or go to court prior to the 6-year mark?
The answer on statute of limitations, each and every state has their own statute of limitations. So in Wisconsin, it's 6 years. In South Carolina, say it's 3 years. So each, all across the country, there's different statute of limitations by state. You need to know that as a collection agency. There's something called time barred debts for us, meaning that after it reaches that point where it's past the statute of limitations, we no longer put efforts into it. Now, some facilities can work it in their name. Some collection agencies risk the chance of working it after that point. You can't sue after that point. That is one of the stipulations. So, and statute of limitations does have tolling in many states, meaning if a payment is made, it does toll some of the information as well. So it's one of those things where you really got to know the level of state regulation to answer that question.
Next question, would you recommend a client ask the agency to return all accounts under X amount of dollars so collections don't have to seize on all non-Medicare accounts?
I do know of several facilities that actually utilize that methodology, so that's something. Well, would I recommend it? I think it's really specific upon your demographics and your patient population, but I do know some facilities that you do utilize that.
And the last question we have here is, where would be the best place on Medicare to find information on all of this?
We can share, I believe it's, Nick, if I remember correctly, we have an article coming out that'll actually have the link to the entire regulation as well. So we can share that with you all as well. And afterwards, I think we can email it out.
That's all the questions.
Awesome. Well, thank you so much, everybody. Really appreciate your time spending with us this afternoon. It's been a delight sharing our time with you. Sean, thanks for all the knowledge that you have and leadership in our ridiculously nice collection agency. Joe, thanks for moderating for us today, and wish you all have a fantastic rest of your afternoon, rest of your week, and here's to having a great 2021. Take care and be ridiculously nice.
Thanks, Nick, as well. You did a fantastic job.